Okay, so let's start with today's paper. This is the sixth set of paper that we are dealing with. Level 3 Financial Accounting. So, year 2019, December. Okay, again, 100 marks. 5 questions, compulsory. Okay, let us start with the first one. Okay, extended trial balance. 6 items, actually 7 items, including the adjustment for inventory. Okay, we have to calculate for the year ended the value of closing inventory and then the allowance for doubtful debt adjustment. Okay, we need adjustment. Okay, but then inventory value. Okay, the extended trial balance, 18 marks in total. So let me update the question details. Extended trial balance. So let's start. Okay, so first item, inventory value. We have 2 classes of inventory giving you the cost and the net realizable value, and then we have to calculate the total. Okay, so for class A inventory, cost is higher than the net realizable value, so there is impairment. Okay, for class B, no impairment. Okay, so remember we have IAS2. Okay, it requires that inventory to be valued at lower of cost or NRV. So if cost is lower, then we keep the cost. Okay, but then if there is impairment, okay, the NRV become lower, then we use NRV. Okay, so 5290 plus 8,000. 5290 plus 8,000, so it will be 13290. This is the value of inventory. We can immediately update the extended trial balance. Closing inventory, statement of financial position, debit, okay, because it is an asset, and for statement of profit or loss, credit, of course. Okay, next. Okay, I will follow the order of the points given and update the extended trial balance. And for the requirement part A2, we will do it when the information is there. Okay, but then you see we have to wait until the last item. Okay, so after item 1, the inventory, then we go on with the other items. Rental income, 1,200, that was owing for the 3-month period ending 30th September had not been recorded. So it is very important that we look at the date of year end, 30th September. So here, okay, as we see that the amount owing, 12,000 for the 3 months, okay, is also ended on 30th September. So the 3 months, the total 3 months is owed. Okay, if you are given October or November, then you have to calculate how much in that 1,200 was actually owed. Okay, but this time the total 1,200. So what expense is that? Rental income, owing. Okay, that means we should receive, but we haven't received yet, so it is receivable, and we add to our rental income 1,200, and it will become our other receivables, income in arrears. Okay, next one, item 3. Item 3, payment for carriage inward, 640, carriage in, was entered in the carriage out account as 460. I will take away the wrong account first. Okay, carriage out 460, I will take it away first. Carriage in and out, they are both debit side accounts. Okay, so take away the wrong one, 460 credit, and put back to the correct account and the correct amount. And then we have 180 here, okay, to balance the adjustment journal. Next, item 4. A set of 900 have been recorded in the subsidiaries ledger only. That means it is recorded in the individual accounts, the subsidiary ledgers, but then not yet done in the main ledger. Okay, that is the control account. Okay, that's why. That means it is not really entered into the books. So we have to go back to trade payables, trade receivables. Payables is in the credit side, receivables in the debit side. So if there is contra entry, that means we have to reduce. So reduce trade payables, that means debit, and then credit trade receivable, reduction of the amounts. Item 5. The purchase of motor vehicle costing 10,000 was entered into the purchases account. So we take it out from the purchases. Purchases is in the debit side. So when we take it out, it is crediting, and we put in the motor vehicle cost account, 10,000. Next, item 6. It is related to the previous one because we haven't charged depreciation yet, 10% straight line basis. In our last item, we have adjusted the motor vehicle cost, added 10,000 to it. So make sure when you calculate depreciation, you use the adjusted amount, that is 47500, and 10%. We have depreciation charge debit because it is an expense, 4750, and then accumulated depreciation for 4750. Okay, in this question, you are asked to work out the depreciation in straight line method, but if it is reducing balance, diminishing balance method, okay, I think everybody can handle it as well. Okay, just make sure you add back the 10,000 adjustment in the cost. So now we have the last item. Okay, that is the allowance for doubtful debt. Okay, 5%. So allowance for doubtful debt 5%. Again, our receivables is adjusted. Okay, here we have negative 900 here. So make sure when you calculate, it is 37400 minus 900, and then multiply by 5%. Oops. 37400 minus 900. 5% will be 1825. We need the adjustment only. Let us look at the opening balance for allowance. It is 2150. So minus 1825. 2150. It is negative 325. Okay, a reduction in the allowance. So the allowance for doubtful debts account is in the credit side. So when we work on reduction, debit, and then credit the adjustment 325. It is an other income, so it should be in the credit side. So we finished the whole extended trial balance, but make sure you mark down this 325 back to the previous part. 2 marks here, that means you have to show the workings. So 2150 minus how much? 37400 minus 900, and then 5%. Okay, usually I I'm so afraid that will lose mark. That's why I will always do something like this. Okay, let me check the figure. 1825, yes. Okay, 325. Okay, decrease. Okay, 18 marks finished. We always work quickly on extended trial balance, but I'm not sure for the others. Question 2. Question 2 is very short information given. Control account, bank column of the cash book, okay, and then discussion of maintaining subsidiaries ledgers, and then some other explanation questions, and 22 marks. Okay, that is a lot. How much? 5, 8, 3, 11 marks here. And then control account, 7 marks. Okay, so let me update. Question 2, it will be control accounts and sundry topics. So let's see what goes into our control account as well as the bank column of the cash book. On 30th December, Joe owed his credit suppliers 4620. So owing to credit suppliers, we are working on trade payables ledger control, and the year end, I think what we have to do, what, let me see. Prepare the following accounts on 30th September and bring it down on the 1st of October. Okay. Okay. Let's see the date. Okay. It is interesting. Oh. So it's kind of a correction of error here, because you are given the balance at the end of the month or of the year, doesn't matter. Okay, and then there are transactions that have not been recorded. And then you have to record it. So given to you the balance, and then in addition, he had overpaid a credit supplier by 200, that is minority balance. And then you have the following unrecorded items. Let me write down the opening balance first. Trade payables ledger control is in the credit side. I mean, it is liability, so in the credit side. Year 2019, 30th September. So you have opening balance. I mean, it is closing balance, but unadjusted balance. Okay, and then this side you have a minority balance. Okay, you don't have to write this minority balance. Just make sure, usually I do it because it reminds me. Okay, sometimes when I see something off, then I will know I make a mistake. Okay, so it helps. So the balance is 4602 and 200. 4602, 200. Let's see what is missing. Okay, these transactions had not been recorded. So item 1, a check payment to credit supplier Lola. Okay, I don't know this Lola. Okay, so this it is just any supplier to settle her account 550. after deducting a 2% discount. $550. Okay, so we read it again. Check payment to credit supplier to settle her account, 550. So 550 means the account, the balance of the account. Settle her account of 550. We have to be careful because we have to see whether the amount given is the balance of the account or the payment itself. Okay, it is very important. So if we are going to pay 550, settle an account of 550 and 2% discount, so 550 multiplied by 2%. Okay, we will have a discount received of 11 and payment would be 539 only. Okay, let us continue first to see if there is any other payment. An interest charge 3% from supplier Mona on the account balance of 900. Okay, so 900 multiplied by 3%, this would be $27 interest. Okay, interest is an addition, and for payment and discount received, a reduction. A check payment to Mona to settle her account. Who is Mona again? Okay. Mona is the one that we owe money to in the previous point. Our payment, okay, again, if it is payment, then it is negative, 927. A refund by check from Sarah. Okay, this Sarah is the minority balance Sarah. So we will receive money, a receipt, 200. The bank balance, okay, this is the bank balance afterwards. So we will update these things to the control account first, and we have two ways to do it. Okay, not really two ways, but then because I see payment here, we have two payments. Control account is a summary. So when we update it, I will also put the summary of what happened. Okay, that is the total. So the two added together, 539 and 927, it will be 1466. 1466, the total payment made to credit suppliers. So I will put that there. So let us update. We have a few items. Okay, first I will put the negative side items. Okay, first thing we have the bank. Okay, this is the payment that we make. Okay, 1466. Okay, what else do we need to reduce the control account for? We also have a discount received. Discount received. What else? Do we have anything else? I guess no. So discount received 11. Okay, and we have interest charged by supplier. Okay, I will write by supplier here because it is also possible that we charge our customers interest. Okay, so the opposite will be interest charged to customers. We also receive money. Okay, this is the refund from Sarah. Okay, received is from bank, so 200 here. Okay, and then there's nothing else. These 200 will cancel out this minority balance, and then we calculate the total. Okay, that is 3152. 3152. Balance carry down, 30th September. Okay, and then the total. Okay, please write the total on your own. Year 2019, 1st of October, the next day you will have this amount and no more minority balance. Okay, if in this case you do not have any refund from Sarah, then you have to carry down the minority balance as well. Okay, but this time you have. Okay, cash book bank column. We have two receipts and two payments and one receipt. Okay, and let's see what is given to us as well. Here, the last item, number 5, it says the bank balance after the above adjustment is 307 overdrawn. 307 overdrawn. Okay, so you will need 4 items before the closing balance. 307. Okay, this is the balance brought down. Bank overdraft. Okay, it is positive in the debit side, negative in the credit side. So year 2019, 1st of October, you have this. Okay, and to bring it back, you have 307 balance carry down here, 30th September. 1 receipt, 2 payment, 30th September, and then 2 payment, 30th. So should I write here? Yes, 30th September. Okay, how much? You have 1466 is the total, but then 539 and 927 are 2 individual items. Okay, now here I have to again remind you of the usual assumption that LCCI Level 3 financial accounting has. Okay, because when we look at previous question, we know that the assumption is the control account is used for the recording of transaction. Okay, it is used as the double entry system, the control account. Okay, so if that is the case, okay, then when you make the payment, okay, what you should do is you record it in the trade payables ledger control account. Okay, do it like this, right? Trade payables ledger control. Okay, and write in full terms. Okay, and then mark here so that you know, okay, who we are dealing with. Okay, this receipt is Sarah, this payment is Mona. Okay, who else? We also have Lola. Okay, Lola here. Okay, and afterwards, okay, you have to calculate how much opening balance you have. 539,927 minus 200 minus 307. Okay, that is, you have an opening balance of 959. Okay, let me calculate one more time to make sure it is correct. Wait, no, it is not. What? Let me calculate one more time to make it balance. 539,927 minus 200 minus 307. Yes, it is correct. Why? What happened? Ah, yeah. Okay, 959. Okay, plus 200 minus this minus that. Okay, yes. Okay, so this is the opening balance brought down 30th September. Okay, we finished this question. Okay, but then what I want to say is, okay, if we follow the usual assumption of this exam, then it should be done like this. Trade payables ledger control here, okay, because it is served as double entry. Okay, but then, okay, sometimes it is not consistent. Okay, so the answer key gives you something like this. Okay, the trade payables ledger control account is not written here, and then they just say it is Lola, Mona, Sarah, okay, which is inconsistent with the usual assumption. Okay, but then anyway, usually what I would teach my student and what I personally will do is I do the correct thing that the thing that I assume is correct. Okay, that is trade payables ledger control, and then to protect myself, I will write Lola, Mona, Sarah in the bracket to show the examiners that I know where these figures come from. Okay, if they do not buy this, then I'll lose 1 mark for the labels. Okay, just like in this case, you're given 1 mark for the correct dates and label. Okay, so finish these 11 marks, then we go on to the explanation questions. Discuss whether Joe should continue maintaining subsidiary ledgers. Okay, so should he do that? Okay, so the subsidiary ledgers are the individual accounts of these suppliers, or in case of customers, then they are customers. Okay, trade receivables. So should you continue? Okay, so first of all, the preparation of these subsidiary ledgers will help you identify the exact amount that you owe to each supplier, okay, which is very important, okay, because you cannot just know that, okay, I have in total this amount owed to trade payables. I cannot do that. I have to mark it individually. So of course it is necessary for each and every business to do that. Okay, but then you see, okay, if you prepare control accounts, the total, okay, the control accounts as well as the subsidiary ledgers, okay, sometimes it costs you time, okay, and time is money. And if it is just a sole trader, he may not have so good accounting basis, okay, and this take up a lot of time from the usual operations that Joe can do. Okay, so here I just mark down some notes. Okay, it is important and necessary. Okay, because the subsidiary ledgers show the balance of each supplier. Okay, not just the balance, okay, but then also the transactions, also show all the transactions, okay, of this, okay, how much purchases are made, how much payments are made, okay, how much discount are given to us. Okay, so this is a very detailed information about each supplier. Okay, so it is necessary, okay, so that you can take the discounts, okay, or make payment on time. Okay, good. This is good. Okay, but then sometimes you also have to think, okay, if you maintain control account and subsidiaries ledgers at the same time, it will cost Joe time and effort. Okay, but then my advice is, of course, a conclusion, of course, should. Okay, the benefits outweighs the disadvantage. So next one, about stakeholders. C1, state one reason why competitors may be interested in Joe's financial statement. Okay, so they can, see the strategy, okay, especially the pricing strategy. Are they doing well? Okay, if they are doing well, how on earth are they doing this? How do they do that well? Okay, we want to know. Okay, so if we are not required to publish our accounts, we never do that. Okay, because information is important, information is valuable, and we should keep most information secret, especially from our creditors. Okay, state two other stakeholders who may be interested in Joe's financial statement. Usually when we are free to give different stakeholders, I will always give government, okay, because it wants to know the tax payment. Is it correct? Are we paying the correct amount of tax? Okay, or is there any difficulty in that inventory, and the government want to support this inventory and give subsidy? Also possible. Okay, and I will also give banks or credit provider. Okay, to be specific, I would say bank. Okay, next one. State one purpose of each financial statement. Okay, this is easy, but then if you have to use just one sentence to give one key point, okay, can you catch that most important point? So, part D, one purpose of statement of profit or loss. Okay, simple. We want to know, okay, we want to calculate the net profit. Okay, net profit, okay, of course, okay, it can be a loss for the year. Okay, second one, the purpose of each financial statement. Okay, of the statement of financial position. The statement of financial position show assets, liabilities, and equity, right? Okay, and showing this, it let you assess the financial position, the financial healthiness of the business. Okay, that's why it is called the statement of financial position. Is the position good or bad in the financial sense? Okay, so in the answer key, it actually write to assess the financial position of the business. Okay, but then for me, if you are just giving this, assess the financial position, so what is the financial position? You have to explain. Okay, that's why I think, for me, I would say it will show assets, liability, and equity, okay, so as to assess the financial healthiness of the company. That would explain what financial position is, rather than you just repeat the words. Okay, next one, statement of cash flows. Statement of cash flows show the inflow and outflows of cash in different categories, right? So it explains the reasons of the inflow and outflows of the business. Okay, you can also say it in another word, okay, is to look at whether we have an increased or decreased cash and cash equivalent, the balance of cash and cash equivalent. Okay, we want to know, okay, how much is increased, how much is decreased. Just like here, we want to know how much profit or how much loss we have. Okay, so you can choose 22 marks here. Okay, it costs you much if you do not like to write these type of explanation questions. Question 3. Question 3. Yes, okay, it is partnership. I like partnership as well because they are usually not very difficult. Okay, partnership. So let us start. We have Anna and Bina. Okay, this time we finally know how to pronounce the names of the partners. Okay, they are in partnership, sharing profit and losses in the ratio of 3:2. And then we have the, oops, my pen. Okay, we have the partnership agreement, 5% interest on capital, closing balances. Closing. Okay, usually we will have opening balances. Anyway, okay, next one, interest on drawings, 10% per annum on total drawings. And then monthly salary, 500 for Anna. So if it is 12 months, it would be 6,000. But let's see if it will be 12 months or not. On the 1st of September, this is the year start. Okay, the capital account balances, current account balances for the two partners. Bina has a negative current account balance. Okay, and then on the 1st of March, how many months afterwards? So it starts in September. September, October, November, December, January, February, and then we have March. Okay, so that is half year through. Anna introduced additional capital of 50,000. Okay, here at 50. So later when we calculate interest on capital, make sure we use the after adjustment balance, okay, because it's at closing balance 5%. And Bina provided a loan, 50,000 at an interest rate 8%. Okay, let us calculate the interest as well. So it is 50,000 multiplied by 8%, but remember it is only half year. 8% half year, so it will be 2,000, the interest. Okay, on 1st of June, Anna's salary was increased by 10%, so I know it. Okay, I know it. Here, we have to revise. Okay, so 1st of June is how many more months? Okay, we have March, April, May, and then June. Okay, so that means 5. Oh, what happened? It is not working. Okay, working. 500 multiplied by 9 months and increase by 10%, that is 550, and the remaining 3 months. Okay, so 550 multiplied by 3 plus 4,500, that is 6150, or I can do something like that. Just now I say 6,000 will be for 1 year, but then for the last 3 months there is an increase of 10%. The increase is $50, okay, multiplied by 3 months. Okay, so that will give you the same amount. Okay, so for the year ended 31st August, okay, that is the year end, the total drawings being this much. Okay, and then something else. Let us look at what we have to do first. Calculate, state, in the absence of partners, of a partnership agreement, how much interest applies to interest on capital? Okay, 0% or none. Interest on partner's loan, okay, it should be 5%. Okay, it is according to the Partnership Act 1890. Okay, the Partnership Act, 5%. Interest on partner's loan or interest on partner's advances, the same thing. Prepare the statement of profit and loss, including appropriation sections. Okay, 14 marks. Okay, and then what else? Okay, the whole page, is it? Yes. And then 2% explanation question. Okay. So we have finished dealing with the with this appropriation, but then we have to see, okay, how much is the profit first. So after here, let us see. Motor vehicles depreciation method, okay, cost and accumulated depreciation and a straight line, okay. Fixtures and fittings, okay, let us calculate the depreciation first. Okay, 32,000, 6,400, 20%, it will be 5. What happened to my pen? It is not working properly. 5120, okay, and then 5%. 72000, 5%, 5%, 3600. Okay, so this is the depreciation. Fixtures and fitting, costing add this one first. Okay, so 72,000 add 1,100, 5%, 3655. Okay, so this one done. Total sales 240,000. Goods sold at a 40% gross profit margin. Okay, so here you have revenue, you have cost of sales, and then gross profit. Okay, and then general expenses 36,760 did not include 600 for the 3-month period ending 30th September. 30th September is not our year end. Our year end is 31st August. So 3 months of this 600, we only owe 2 months. Okay, that is our owing is 400. Okay, that is 37160. Rent expenditure 12,000 included 3,000 for the 4-month period ending 30th November. Okay, we have to see. Okay, the 4-month period includes November, October, September, August, September, October, November. Yes. Okay, our year end is 30th August. Okay, that means of the 3,000, only 1 month is related to our period. Okay, divided by 4, we have 750 and 2250. This is a prepayment. Okay, so that means we have to minus 2250 here. Okay, so 12,000 minus 2250, we have 9750. Okay, so we have all the necessary amount that we need. Okay, how many items of expense? 1, 2, 3, 4. Okay, and also 5. Don't forget this one. Okay, Okay, this 5. Is it not good enough? Let me use red. Okay, this 1, 3, 4, 5. Okay, now we will work on our statement of profit and loss first, and then the appropriations. Okay, I hope we can finish in this page. I hate going to another page for the same statement. Okay, I hope we have enough space. Okay, let us save some space. Okay, so we have revenue less cost of sales. It is not a heading because we do not have the things inside. Okay, and then we have gross profit. Okay, and then we have the expenses. We have 5 items. Okay, I'll write it later. Okay, so revenue 240,000. Okay, and then for cost of sales, and then gross profit we have 240 and multiply by 40%. 40% profit margin. So 240, 40% being 96,000. Okay, that means 144 for our cost of sales. Okay, so we finish one part now. Then the next part we have loan interest. Okay, if we follow the order there, okay, loan interest, we have depreciation on fixtures and fittings is next one. I think it's motor vehicles first. Motor vehicles, depreciation on fixtures and fittings. Okay, and then we have what else? General expenses and rent expenditure. Okay, general expenses. Okay, and then rental expenses. Okay, so loan interest 2,000. Oops, 2,000. Okay, and then motor vehicle depreciation 5120 3655 5120 5120 3655. Okay, and then the next two 37160 and also 9750. Okay, so 37160 9750, and then we have profit for the year 2000 5120 3655 37160 9750. So we have total expenses 57685 negative for expenses, and then net profit being 38315. Okay, after this, appropriations. Appropriations. Okay, you can also call it the appropriation section. Okay, so my usual way, I will write salaries first, less salaries for Anna. Okay, and then, do we have enough space? 1, 2, 3, 4, yes, I think so. Okay, so interest on capital, we have Anna and Bina. Okay, let me save half the line. Okay, add back interest on drawings. Anna and Bina. Okay, salary 6150 as calculated. Okay, and interest on capital Okay, let us see. Here we have 300,000, 5%. Is it? Yes, 5%, 300,000, and then 150,000. So 300, 5%, it is 15, and then 7500. So we will have 22500 negative. Interest on drawings, 10% on total drawings. 10% on total drawings. And then we have drawings where? Okay, here. 1675 and 1245. 1675, 1245. 1675 and 245 added together we have 2920 total. Okay, so this one 38315. Okay, so we have 12585. Usually I call it residual profit or profit available for distribution. And then of course we have the share of profit 3-2 or 2-1. I don't remember. 3-2. Okay, so we have Anna and Bina. Okay, 3/5 and 2/5 for this 12585. Five 034 and then 7551. Okay, let me calculate one more time. Yes, okay, 12585 done. 14 marks. This is good. Okay, the calculation is not difficult, but let me just remind you a little bit. I think for the accruals and prepayment, we really have to be careful because last time we discussed not last time, but just now we discussed on one item of adjustment for the extended trial balance. Usually, what appears there would be 3 months, but given to you 3 months accrual or 3 months prepayment, but then only part of it is related to our current year. Okay, it does not appear just now in the extended trial balance, but then it appeared here. Okay, that both items. Okay, accrual only 2 months accrued. Okay, prepayment 1 month prepaid. 1 month is related to our current year, and then 3 months prepaid. Okay, we have to be careful. Okay, not the whole amount of accrual and prepayment, because the whole amount to be adjusted, that is for level 1, not level 3. Okay, so one more item that we usually easily make up or easily missed, okay, is we might forget loan interest. Okay, remember loan interest from partner is an expense, so it go to the expenses category. Okay, it's not an appropriation item, it is an expense, so it happened before the profit. Okay, it appeared there before profit. Okay, so next one, 2 marks. Explain one reason why Bina choose to provide an 8% loan rather than investing more capital. So first of all, for me, capital gives you 5% interest on capital. Okay, and for the loan it is 8%. Okay, this is one reason. Okay, another reason is that, okay, this loan, okay, although it is not told how long the loan will last, okay, but then there is always a maturity date. Okay, even though you might not write it clearly, okay, when this loan would be called, okay, but then you can call this loan when you need the money, when Bina need the money, okay. So it is an investment, a temporary or short-term, medium-term investment that can be, the loan can be called back. Okay, but for capital, it is not. For capital, you need to have the agreement of both partners, you and the other partner, Anna, for any change in the partnership. Okay, I mean the capital of the partnership, of course. Okay, that's why it is different. Okay, so you can write any reason for that. Okay, because you are only asked to explain one reason. Okay, so next question would be a statement of cash flows. Okay, you can see, okay, some explanation, okay, some calculation of the disposal account, and then the statement of cash flows, 20 marks. Okay, so this question 4, we will tackle it after we are back from the break. Okay, so 10-minute break for me. See you soon. Okay, I'm back. So, statement of cash flows. Let's see. Okay, we are given opening and closing balance, bank loan, petty cash, cash at bank. Okay, so these two are cash and cash equivalent. Okay, equipment at cost, opening and closing balance, share capital, opening, share premium, opening, and we have to calculate the closing. Okay, so some items. Okay, and then we have to work on some description questions first. Private limited company, two characteristic. Okay, we can list a bunch of those. Okay, private limited company and public limited company. So, first of all, let's see what we should write. So, if we have to compare, for example, partnership with limited company, then we should say something like limited company limited liability protection. But then here, because we have to compare these two, that's why I won't write that item. Okay, but then you are not asked to compare them, you are asked to give characteristic. So strictly speaking, okay, in this question you are still allowed to give that. Okay, and it can be a point for both type of business. Okay, because you are not asked to compare them. Okay, so both you can write, okay, enjoy limited liability. Okay, the owners, the shareholders. Okay, but then I will skip that part. Okay, so private limited company. Okay, according to the Companies Act, okay, there is no minimum capital requirement. Okay, but then for public limited company, okay, you should have at least 50,000, okay, share capital requirement. Okay, private limited companies, okay, the share purchase, okay, or sell, okay, or transfer is not public. Okay, it's not publicly available. And also, if you want to, purchase or sell or transfer your shares, it has to be agreed, okay, by the board. Okay, you cannot just sell it anyhow to anyone. Okay, because usually for private limited company, it is family based, okay, or very close to external investors. Okay, it can be among friends. Okay, but then there should be an agreement of the board before you can do this transfer or purchase or sale of shares. Okay, but then here for public limited companies, okay, the shares are publicly traded. Okay, it can be purchased or sold in the stock exchange. Or you can transfer your shares to anyone. Okay, so the disposal account, okay, and then the statement of cash flows. Let us look at the items that we have. Okay, on the 1st of November, what is our year end? The year end is 30th September. Okay, so during the year on the 1st of November, a right issue of ordinary share for every 4 ordinary shares held was made at 1.25 each. Okay, so 1 for every 4. We have to look at how much we have originally. Okay, it is 200,000. So 1 for every 4, that means our new issue is 50,000, and then okay, we are going to receive 1.25. Okay, that is 1.25. That is, we are going to receive 62500. Okay, and here we add 50,000 here. We add 12500 here. Second one, let me change the color. On the 15th of February, a further right issue of 1 ordinary share for every 5 ordinary shares held was made at 1.75. Okay, so that means we continue to issue. Now we have 250,000. Okay, and then divided by 5. Okay, that is, we are still going to issue 50,000, still 50,000, but then at 1.75. Okay, 1.75. That is 87500. Okay, these are receipts. Okay, add 50,000, add 37500. Okay, so these are financing activities, positive. We receive money. Both right issue were fully subscribed. On the 23rd of July, equipment costing 150,000 with accumulated depreciation 54 was sold at a profit of 2,000. Okay, given to you the profit. Okay, and that's why we can work on the disposal account. Okay, 150, 54, and then 2,000. Okay, so let us look at the disposal account. Let us use what color? Purple maybe. Okay, when is the date of the sale? 23rd of July. Okay, so year 2019, 23rd of July, right? 23rd of July. Okay, so the cost go in here, 150, is it 1,000? Yes. Okay, and the accumulated depreciation, 54,000 goes to here. We have a disposal gain, so it goes to here. Disposal gain is here, 30th September. Okay, and then we receive money, bank. Okay, let me write down all the things first. Is it equipment? Yes, equipment, cost. Okay, equipment, cost. So here it is equipment, allowance for depreciation. Okay, bank, we have to calculate how much, and then this is statement of profit or loss. Okay, this one is a disposal gain. Okay, so 150, 2,000 minus 54, so we are going to receive 98,000 for it. Here it will go into investing activities, positive, we receive money, the proceeds. Okay, if we are not working out the disposal account, I will still work out this format here. Okay, the proceeds, okay, less the cost, less the accumulated depreciation. Okay, so 150,000 here, 54,000 here. Okay, so it is 96,000, and then we are making a 2,000 gain. So that means the profit is 98,000. The same. Okay, gain. All receipts and payment were made through the bank. Okay, and then for the year ended 30th September, the net cash from operating activities given to you, the net cash from operating activities, 19670. So we do not have to calculate the first part of the statement of cash flows. Okay, so what else are in here? Okay, I should also mark it here. Okay, operating activities negative, but then we do not need it because we already have the cash flows from operating activities given to you. Okay, but then I still mark it. Okay, if in case we need to do it, okay, you still know how to work on it. Okay, so what else do we still need to finish the statement of cash flows? Okay, here we have the bank loan. We have more bank loans, so added, let me use another color, green maybe. Okay, 50,000 here. That means we have taken out a new bank loan. Okay, or added to the existing bank loan. Okay, so financing activities positive, we receive money. Okay, petty cash and cash at bank. Okay, credit means negative. So opening balance, we have 230 and then 7,500. That means we have negative 7270. Okay, this is the second last item. And then the last item, 450 and 9950, we have 10400. The last item, closing balance of cash and cash equivalent. Okay, one more item, equipment at cost. Okay, originally you have 650, now you have 700. Okay, what is in there? You have two things. It is the cost. Okay, first thing is you have disposal. Okay, 150,000. Okay, usually I will write it as the second item. Okay, disposal. And you have purchases. You have to calculate how much purchases. So 650 minus 150, you should have 500. Okay, but now you have 700,000. That means you have purchases of new equipment, and it is 200,000. Okay, let us calculate again to make sure it is correct. Yes, it is. Okay, so this, okay, investing activities negative, you pay. Okay, so now we finish. We can go on. Okay, we have two things. Okay, to write down 2 marks and 2 marks. Receipts from right issue. Okay, we have two items, 62500, 87500. We have to give the answer 62500. And then 875, is it? Okay, so 625, 875, 150,000 in total. Okay, paid for the new equipment. Okay, we have just calculated 550. Okay, or we use 700. Okay, minus 550 minus 650. 650 minus 150. Yes. Okay, so we have 200,000. If you are only given 1 mark, then you can just write the answer there. Okay, but then if you have more, okay, that means you have to show your workings as well. Okay, so next we will have the statement of cash flows, and we'll start with the first item, operating activities given to us. Okay, let me write the two columns first. Okay. Cash flows from operating activities given to us. So how much is that? Let me arrange the page. Okay. 19670. Okay, 19670. Okay, next we will have cash flows. Oh, or here I should write net cash. Okay, let us stick to our format. Cash flows from investing activities okay, so we only have two. One is, okay, payments to acquired ACQ acquire equipment. Okay, how much? 200,000. Okay, negative. And proceeds from the sale of equipment. How much? 9,800. Okay, let us check. 98,000. Okay. 98,000. Okay, so we have 102,000 negative. So it would be net cash used in investing activities. Next, financing. Cash flows from financing activities. Okay, so this is our 6 set of paper. Is it 6? Okay, if you have been following all these 6 sets, okay, I think by now you should be quite confident already. Okay, that's why I am also working on it faster. So you have 2 things. No dividend declared. Okay, let me check later. Okay, first you have the right issue. Okay, and then you also have bank loan. Is it bank loan? Is it a bank loan? Yes, bank loan taken out, or you can say increase in bank loan. Bank loan taken out. Okay. Right issue. How much? 150,000, if I remember correctly. Where? Yes, here. 150,000. Okay, and the bank loan. Okay, you have 50,000. So 50,000. Any dividend? Let us check again. Okay, no dividend, no dividend, no dividend, no dividend. Good. Okay, so no dividend. So here you have 200,000. Okay, this is the net cash from financing activities. Okay, and then these three added together, 19,670 minus 102,000 plus 200,000. Oh, is it? Bank loan, let me see. Bank loan, okay, this is a reduction, not taken out, because I'm thinking that is too large an item, too large the balance, I mean the increase. Okay, so this is a reduction, 180 to 130. So financing negative, you repay the bank loan, you repay part of the bank loan. Okay, so here bank loan repaid, or repayment of bank loan repaid. Okay, 50,000 negative, that makes it 100. Okay, that is more reasonable. 19670 minus 102,000 plus 100,000. So 17670. Okay, so let us plug in the last two items to see if it is correct, and then we fill in the wordings later. Okay, so we have calculated negative 7270 and then 10400. Negative for opening, negative 7270, okay, and then 10400. Let us confirm. 17670 minus 7270. Yes, it is correct. Okay, so we fill in the wordings. This is a net increase in cash and cash equivalent. Okay, and then this is cash and cash equivalent on 1st of, what is the last day, 1st of October year 2018. And then I hate to write so many words. It gives too much pressure on my hand. Okay, so you know the words. Okay, on 30th September year 2019. Okay, finished. Okay, that is 20 marks for question 4. Oh, why? I forget to put statement of cash flows here. Oh, and it has to disappear very soon. Cash flows. Okay, let it appears for 5 seconds. Okay, so 20 marks. Okay, and last question. Okay, so this is single entry plus. I will classify it as the financial statement of sole trader. Okay, not much single entry things, but then we have to know the concept. Oh, okay. We have to calculate at the 1st of July, the capital expenditure, revenue expenditure, and then trade payables, adjusted profit, and then part D, prepare the statement of financial position. Okay, not the end yet. Okay, and then explain something, and then do evaluation on profitability and liquidity of the proposal. Okay, let's look at it later. Okay, so what is given to us? Let me change the question details first. This is financials. Let me just write sole trader. Okay, financial statement of sole trader. Okay, so let's see. On the 1st of July, year 2018, this Mahima opened a restaurant. Mahima. Okay, nice name. On that day, she purchases premises costing 122,000 with legal fees 1250. Additionally spent on tables and chairs 10,000, kitchen improvements 15,000, new signage 750, disposable tablecloth 500. The business was financed through Mahima's own funds of 120,000, with the remainder being funded by a 5-year bank loan at an interest rate of 10% per annum, pay half yearly in arrears on the 31st of December and 30th of June each year. Okay, 5-year bank loan, long term. Okay, and half yearly for the interest. Good. So we have to calculate the amount of loan. Okay, but we do it later. Mahima decided to depreciate her tables and chairs 10% per annum, premises 2%, and write off kitchen improvement over 3 years. Okay, all straight lines. During the year, okay, so this is during the year. So we wait a bit first. Okay, so first part, calculate capital expenditure, revenue expenditure, and 2 marks for both items. Okay, that means we don't have to show the workings. Okay, so this is capital, right? Legal fees related to the purchases of premises, always capital. Okay, tables and chairs, capital, of course. Improvement, capital. Signage, new signage, then it is capital. Okay, so the only revenue expenditure is the tablecloth, because it is disposable tablecloths. If it is not disposable, if it is tablecloths that can be used for more than 1 year, then it is not revenue expenditure. Okay, so 500 being revenue expenditure, and the rest will be capital expenditure. And let us calculate. 122,000, 1250, 10,000, 15,000, 750, 149,000. Okay, but then we don't just add everything up. We have to calculate depreciation for each item. Okay, so tables and chairs, and then premises, and then kitchen improvements. Okay, so tables and chairs, okay, 10,000. Okay, that would be 10% per annum, would be 1,000 depreciation. Okay, so it's 10,000 multiplied by 10%. Okay, but then I don't want to confuse you. Okay, premises, we have 2 parts. Okay, let me see. 1,000, 122, 125. Okay. Okay, for the premises, we have 3 parts. Okay, that is the premises cost itself and the legal fees. and also the signage, because the sign is attached to the premises. Okay, if we do not have a separate depreciation for the signage, okay, given to you, I mean a separate percentage. If it is not given to you, then it is attached as part of the premises. Okay, so added together. So it is 122000 plus 1250 plus 750. Okay, together we have 124,000. Okay, and then 2% being 2480. Okay, this is for premises. Okay, kitchen improvement written off over 3 years, so it would be how much? 5,000 for each year. Okay, so depreciation for the 3 items. Okay, so after this we can calculate the profit, because we are asked to calculate the profit as well. Okay, and before that we have the total trade payables. Okay, so let's see. Credit purchases 219, trade payables payment period 30 days. Okay, and with these two we can calculate, okay, the amount of trade payables, because trade payables over credit purchases, okay, multiply 365 days, we have 30. Okay, purchases we have already, so purchases being 219,000. Okay, so trade payables is equal to 30 multiplied by 219 divided by 365. That is 18000, 18,000. We can write it there, 18,000, 1 month. So just write the figure. Calculate the adjusted profit. Are we given the unadjusted profit? Yes, draft profit before depreciation. Okay, so we have calculated the 3 depreciation. Okay, now we have the draft profit of 54980. 54980. Okay, so we have 54980, the draft profit, minus the 3 depreciation, 1000. Okay, and then how much? 2480, and also 5000 minus 1000. 2480, 5000, 46500. Okay, finished. Okay, prepare the statement of financial position. Okay, let's see. Okay, apart from this, what else do we have? We have inventory. We have, okay, good. We have drawings. Okay, so 3 line, 3 column. The cost, accumulated depreciation, and then carrying value. We have non-current asset, 3 types. First we have premises, and then we have tables and chairs, and then we have kitchen improvements. Let me charge my phone first. Okay, good. Not good. 27% left. Okay, and then we have total non-current assets. Okay, the total. Okay, premises. Just now we have calculated the total premises to be 124,000. 124,000,2480 as the depreciation. Tables and chairs is 10,000, is it? Yes, 10,000. Depreciation 1,000. Kitchen improvement 15,000, and then written off in 3 years time. Okay, so 520, 9,000, 10,000. Okay, so this is 124, 515, 149, 8480. 140,520. Yes. Okay, and you can see this is equal to the total capital expenditure that you have. Okay, so next part will be your current assets. Current assets, we have inventory. Do we have any trade receivables? I guess not. Okay, so next one, do we have cash and cash equivalent? Do we? And we haven't even calculated. Oh my goodness. Okay. Wow. This is interesting. Cash and cash equivalent not given to us. So we have to calculate this as the balancing item. Okay. So this is our last item. Cash and cash equivalent. Very interesting question then. Inventory, and then cash or bank or cash. Okay, the same thing. Cash and bank also okay. Cash and bank. Okay, maybe I write it like this. Bank and cash, is it better? Bank and cash. Okay, is it really not given? So we will have total asset, but then we do not have total. Okay, so I mean, we do not have it until we finish the second part of the statement of financial position. Okay, so what is our inventory? 28950. 28950. Okay, so next we have equity. Okay, opening capital, opening equity, add profit for the year, less drawings. We have closing equity. Okay. Opening equity given to us, 120,000. Okay, and also 3,500 as drawings. Okay, 465 as the profit. 46500, 3,500, 120,000, 120,000. 465 minus 3,500. Okay, that will give you 163,000. Okay, next one. We haven't touched that part yet. That is the non-current liability and also the interest. Okay, because we do not have to calculate the statement of profit and loss. I mean the interest. We haven't done it yet. Okay, the interest accrual. Okay, so non-current liabilities, we have the bank loan. Okay, because it is a 5-year bank loan, so it is long term. How much? Okay, so we have spent, okay, if you still remember, the total added together, we have spent 149,500. Okay, that is the total amount that we spent as our initial purchase of non-current asset, and then we finance it, okay, with our own fund. Okay, the remainder is financed through bank loan. 5-year 10% bank loan. Okay, so 29500. 29500. Okay, next part we have to think. Okay, do we have any interest accrual? Okay, we have to think. Okay, we have to assume we have. Okay, but then let us look at it. Okay, current liability. Okay, let us put the trade payables first. Trade payables. Okay, we have calculated to be 18,000. Okay, I won't write it first because I want to see if I have to write it here or here. Okay, 18,000, but then let's see. So we we take out the bank loan on the 1st of July because we have to buy the non-current asset. Okay, and this the interest is paid half yearly on 31st December and 30th June. Okay, and our year end is 30th June. Okay, that means we should have paid the interest by the end of the year. Okay, there is no interest accrual. But we have to be careful because sometimes, okay, if the loan is not taken out on the 1st of July, if it is, for example, on the 1st of October, then we should have some 3 months of interest accrued to be made. Okay, we have to be careful, but this time no. Okay, so this 10% and yes, interest is just given to you to see if you know. Okay, but if I'm the one to set the paper, I will make I will make sure that you have to know the interest accrual. Okay, but that this time no. Okay, so I just have one non-current asset, so I won't put it in the third column. Okay, here 18,000. Okay, after this I would have the total equity and liabilities. Okay, so total 18,047,500 plus 163,210,500. So it will go back here 210,500 140,520 being 69980, and then 28950 41030. Okay, finish. Okay, so this is the last item that we fill in. Done. I like this type of question. It is at the same time challenging. Okay, but then the concept that you need is not that much. You just have to be very careful and know what is in each of the statement. Okay, because if you do not know, how can you put the whole thing back in place? Okay, it tests you on a high level basis. So last 7 marks. Discussion questions. Explain the effect on equity if the cost of the kitchen improvement are written off in the first year. Okay, so the kitchen improvement, okay, 15,000. Now it is written off in 3 years' time. I mean, equally in each year. Okay, what happened to equity? Okay, if it is written off in the first year. Okay, so if that is the case, okay, your depreciation expense or your improvement written off expense will increase. Okay, and then your profit would decrease, and then your equity would decrease as well because profits goes down. Okay, you have to explain this chain of logic. Okay, so next one. Mahima is considering changing her supplier to one who does not offer credit terms but offer a trade discount. Evaluate. Okay, this one is good because it is this is basic, I think. Okay, evaluate the effect on profitability and liquidity of this proposal. Okay, so in this case, I will not break it into for and against. Okay, I will break it into 2 parts. Okay, one will be profitability. Okay, one part will be liquidity. Okay, so for profitability, if there's no credit term, okay, but then you are given a trade discount, that means your cost, your purchases, okay, or your cost of goods, cost of sales as well, okay, will go down. Okay, because you have discount. Okay, your cost will go down, okay, and your profit will go up. Okay, better profitability. But then, okay, you have to give one condition. I think if you have to think one more step ahead, okay, then you have to say this is only true if you are not having any early settlement discount. Okay, that is discount received. Okay, because you might have credit terms and discount received before. Originally you have that, but now you shift to another customers, I mean another supplier, no credit terms, okay, but then enjoy a trade discount. Okay, but then at the same time you will lose that discount received. But usually a trade discount would be better than a cash discount. Okay, because for a cash discount received, it is possible that you will lose this discount, and also usually the rate is lower. Okay, so we can confidently conclude that the profitability will be better because of the trade discount. Okay, but then for liquidity, it will deteriorate. Okay, why? Because you have to pay cash upon purchases. Okay, that means if you have no cash, then you have no purchases. Okay, you pay your purchases directly, and then you know, the inventory sits in your warehouse until it is sold, and you have to wait for your trade receivables to pay you. But then in this case, it is still good because you have cash sales. Okay, how do you know that? Because there is no trade receivables in your statement of financial position, so you sell on cash basis. Okay, you know it from your statement of financial position. Anyway, okay, this is good enough. So in conclusion, okay, you have to say whether you like it or not. Okay, for me, you have a good and healthy balance of cash and cash equivalent, right? Okay, there is 41,000 something. So this is healthy. You do not need to worry that you don't have enough cash. Okay, that's why you can also say that because you have enough cash, okay, you are not afraid that you will be running out of cash. So if you can switch to another supplier that gives you a higher profitability, okay, that is nice, right? Okay, so that is all for today's paper. We finish it in 2 hours time, including a break. Okay, that means this set of questions might be a little easier. Okay, so our next section, because my schedule is a little bit not very stable, okay, in this few weeks time, so I will try to stream for a few more papers in these days, okay, and then take a week or more of a break, and then come back and continue. Okay, so Friday is the 21st of July. So 21st of July, let me see how many sets of papers we have for year 2019. Okay, we have finished December, so we will work on September year 2019, hopefully Friday 21st of July, and then 22nd we continue with July's paper. Okay, 23rd, okay, if I'm still alive, okay, then it is June's paper. Okay, and then 24th after June we have April. Okay, so we might have 4 days in a row revision for LCCI Level 3 Financial Accounting. Okay, and then I'll take a break until the beginning of August. Okay, maybe on the 5th. Okay, I'll be back. Okay, so that's all for today. Thank you for working on this revision with me. This is the channel Love for Accounting. So see you later. Okay, next day, Friday. Bye.